For more on chain store sales, let's bring in Lori Wachs, founder of Cross-Ledge Investments. Before starting her own firm that invests in retail companies, Lori was a retail specialist at Delaware Investments, and she joins us now from Florida. Lori, welcome back to Bottom Line. Always a pleasure to have you on.
And a pleasure to join you on this very interesting day in the market.
Yeah, very interesting indeed. Lori, even with U.S. consumers spending unexpectedly dropping in June for the first time in almost 2 years, it was a mixed month for retailers. Why?
We've really continued to see similar themes that we've seen in the past. Companies that have been doing well, like you just mentioned, some of the high-end retailers, some specialty names like Abercrombie and Fitch that really seem to have provided the customer with the offerings that they want, have done well. It's that lower-income consumer that continues to suffer. But overall, if you look at the general mix of retailers this month, reporting a comp of up around 5%, it's a pretty healthy month.
Lori, how did the retailers handle their inventories and expenses?
Again, it's a little bit all over the map, but if you look overall, about 14 companies beat this month, whereas 8 of them missed what we were expecting, yet only 2 of them had to lower their guidance. So if you look at a company like Kohl's, for instance, and they had same-store sales that were one of the bigger disappointments of the day, down 4%, very uncharacteristic of them to come in so below their plan, yet they were actually able to raise guidance by a few cents because their inventories were clean, they managed expenses well. Similar story for The Gap, which has clearly not been doing a good job for some time now, yet with this very disappointing number of down 5%, they were able to take earnings numbers up. Their inventory is in much better shape than it's been in some time.
Lori, my colleague Heather Prabhakar was on just before I started talking to you, and she did mention about the promotions. There could be some deep discounts given the consumer climate and consumer sentiment out there, but how is that going to impact margins for the retailers going forward?
It's a good question. Again, we're leaving behind this summer quarter, and largely the retailers should come through with margins in generally good shape. The big question and the clearance activity with the heat, they were able to clear through things. So now as we enter this back-to-school selling period, everyone's nervous. The back half of July seemed to slow a little bit. We're not sure if it's because they sold through some of the wear now merchandise earlier in the month. They didn't have it left. Overall consumer slowing, we're not sure. And as we get into the fall, we're finally going to see the impact of those cotton price increases that we've been hearing about for over 6 months now. They're really going to start to hit the stores. And I think the timing of a consumer accepting a 10% price increase is not actually going to work out all that well.
Well, July, as you know, it's a clearance month. It's the least important month for the quarter. Are the numbers then a fair representation of what's really going on with consumers?
It was perfectly in line with what we've seen the last few quarters. Generally speaking, I don't put a whole lot of credence into what July is going to tell us for the back half of the year, but we'll know a lot more a month from now because back to school will be in full swing. We'll have a few more weeks of this overall market malaise played out. That could start to affect the high-income consumer, which we haven't seen in some time now. So we're all kind of sitting with bated breath to get through these next few weeks and see how the sales materialize a month from now.
Well, Lori, in our last minute, because you just did mention the back-to-school shopping season, talk to me about how you factor that in, given the weak economic data and the beating that the market's taking today. What are you expecting?
Back to school is the second most important selling period, so it is something that we stay keenly focused on. I have seen estimates that it should run up around 3% this year. And again, given that we've been in this nice band of same-store sales increases of 4 to 6%, I don't see a reason that we shouldn't be able to meet that 3% expectation out there other than these tremendous external factors that are working their way into the market. And we know that this can be a bit of a self-fulfilling prophecy, especially as it relates to that higher income consumer where the stock market does make up a good portion of their wealth.
Lori Wachs, the founder of Cross-Ledge Investments, joining us from Florida. Lori, it's always a pleasure to have you on. Thanks so much.